Hey guys, this is Mark Shawson, the Pattern Trader here. And last night I finished watching the last installment of a ESPN five-part series called The Last Dance. It was all about the iconic basketball player Michael Jordan's journey over the course of the two three-peats that he performed in 6 years with the Chicago Bulls during the mid-1980s. From 1992 to 1998, the Chicago Bulls won a total of 6 NBA Major League Championships, and that included 2 three-peats. So they won 3 times in a row, twice. And in between that, Michael Jordan just decided to take a hiatus and play professional baseball. So one of the most versatile, iconic players that we've ever seen. Now, I had the great joy of watching this 5-part series. Each series was over 2 hours each Sunday night. And I was watching it with my 18-year-old son, who grew up playing basketball, grew up in the era of Kobe and Shaq and LeBron. And while he had heard of Michael, kind of never seen him play and never understood those days. So it was just really unbelievable sharing that piece of history that I remember so well with my young son. And that was just a priceless experience. Now, over the course of the 10-hour mini-series of Michael Jordan's last dance with the Chicago Bulls, obviously showed a lot of ups, showed how he was able to prevail under enormously pressure-filled expectations. He knew that kids and everybody who was turning out to those games was there to see him, and that he knew that he had to perform on every single occasion, because people just came for a glimpse and may never see him again, paid a lot of money, and he felt very honor bound to make sure that every one of his performances honored their expectations, honored the time and expense that they took to come out and see him. And so it's really one thing to want to do that. It's one thing to have that as your objective, but the body's the body, and sometimes it just doesn't want to perform. But there was never a night that Michael Jordan did not perform and just exceed expectations night after night. Now, over the course of the 10 hours, we saw a lot of footage, the ups and downs, some outtakes with his teammates, the usual banter, the usual arc of, commitment, sacrifice, perseverance, go down, then prevail. And it was only toward the end, there was about a 45-second part of the last documentary. And to my mind, that was the greatest takeaway. I said to my son at the time, if you've watched 10 hours of this footage and missed this was the real takeaway of the 10 hours. And basically, there was kind of an overlay. Somebody was saying, that Michael Jordan was able to achieve this Buddha-like status where, Buddhist monks and yogis, go up in the mountains and meditate for 10 hours just for a moment to be present, just to, drown out all the prior history, prior expectations that usually project future failure. And he was always able, no matter what the circumstance, to produce under pressure because he was in the moment. He wasn't bringing the baggage of the last point or the last game that he lost. He was in the moment and was able to execute right at the buzzer almost every time, just because he was able to release that ball and be in the moment. And one of the key quotes from him, and if you missed this, you kind of missed everything. He says, "Why should I be afraid of taking a shot before I've even taken it?" Now, that's Mikey. Most of us, with the city of Chicago's expectations on the line, the crowd on the line, the finals on the line, your teammates' expectations on the line, your own historic parameters and barometers on the line, most of us would have cement in our arm for that last shot. We wouldn't even be able to get it halfway to the basket. But Mikey was able to drain those baskets one after one, and you can see he had complete freedom in the moment. Wasn't even thinking about it. didn't think about his prior baggage and what it could mean, and what would failure mean, and how would he be viewed if the basket didn't drop in. And these obviously are special people. Guys like Michael Jordan in basketball, Muhammad Ali in boxing, Wayne Gretzky in hockey, Roger Federer in tennis. These guys have a championship mentality. They are able to transcend their game. And despite the fact that a lot of guys out there have talent, I think the differentiating thing is the 6 inches they have between the ears. The ability to drown everything out and produce under the most extraordinary circumstances time and time again. And I think it's really this moment of Zen, this moment of being in the moment to be, drown out everything else, the moment not to bring, all of your historic baggage to the moment. And really what I'm trying to say is this, applies to anything, and certainly trading, where, every time we do a trade, probably thinking about the last 5 winners we had. Maybe you took a trade where you got out too soon, or your stop loss was just hit as the thing turned around, and now you're bringing that baggage to the next trade and not able to see that setup as well as you should, with the complete freedom of just being in the moment, evaluating that setup for what the merits of that setup bring, not what your past trades did or didn't do, what you want, what your objectives are in the future, what you need to make money for your family, to just be in the moment, to evaluate that setup and take it, and it could be that setup that changes your life. So today I'm gonna take a look at 3 different trades I've done over the recent time frame. One was a big winner, one was a minor loser, and then one trade didn't even get executed. So as you know, I have a layered approach where I kind of look at my analysis, I set up the trade, and then I require the market to confirm my analysis in the form of a buy stop if I'm looking to buy a market, or a sell stop in a market that I'm looking to sell. So over the weekend, I was looking at the Australian dollar versus the US dollar. I thought there was a turning point. I thought the market would turn down. I proposed that we put in a sell stop trading order, and the market shot straight up. I love those days. I love those days when I'm wrong and I don't get put in the trade. That to me is a perfect day. No foul, no loss. Just frees me up to look at the next trade. Frees me up to look at the Australian dollar when it makes another setup, and I don't worry about that. Conversely, if I have a couple losers, I don't worry about those either. I'm just focusing on that next trade setup, that could extend for a huge winner and wipe out all of the prior losers. So now I'm going to go and take a look at the real-time charts, show you the last couple of batchfuls of trades I've taken, to give you an idea that I don't need to win on every trade. And I don't need to worry about taking that trade and worrying if it's going to be a winner before the trade's even taken off. All right, so now in this video, I'm going to walk you through a set of 3 of my most recent trades and show you how one trade won really big. One trade didn't get executed at all because it did not hit my trade entry order, and the other one was stopped out for a small loss. And so what I want to demonstrate is that, just like Michael Jordan, I don't have to freeze. I don't have to overthink one particular trade. I'm not worried about taking a loss on any given trades. The math of the way I set my trades is going to help me become a long-term and sustainable winner. On my screen is an email that was sent out to our Elite Daily Pattern Trader members on May 5th, right around 5:10 p.m. I taglined that email, pound versus US dollar resistance. And as you'll see in a moment, I was looking at several resistance patterns that suggested this trade was going to go lower. So you can see the way my emails are normally set up. I demonstrate exactly what I'm looking at the chart so you understand exactly my thinking when I set up a trade. And in the particular case of the British pound versus US dollar, this is a daily chart. This goes back about a year, but I felt that there were enough compelling patterns on this to demonstrate what I needed. In this case, we had what I call a governing double top price pattern. A double top is a resistance formation that indicates that it's going to reverse in the direction of the trend once it's topped out. With the word top in it, it suggests once it's been confirmed, when it hit this 128 neckline, it was going to go lower. Then you can see it did exactly that, went lower, then it retreated back to about the neckline of that governing double top and made an interim double top right around the 127 price level. To me, this was a laydown. This was a market that has been going down for many years, and now we had some significant short-term resistance patterns that suggested that the risk reward was firmly in my favor. Now you'll see that I don't just arbitrarily go in at the market. What I did was I put a pending order at 124.17 right under this little inside day bar. I'm going to go to live charts in a moment. I'm going to draw this trade up, show you exactly what I did. But first off, I noticed the trend, then I noticed the pattern, then I wait for what I call my insurance day bar, in this case the inside day bar, and then I layered it all with a sell stop execution strategy that requires the market to confirm my analysis. If the market never triggered my sell stop, no harm, no foul. I would have just gone on and looked for another trade. So you can see here was my particular trade setup. This again was on May 6th. With a sell stop under the inside bar at 124.17, and you could see that I had a stop loss about 70 pips higher, and then I had a take profit about 200 pips higher. So I had about a 3-to-1 risk reward on this trade, which is mathematically you can afford to lose 72% of your trades if you are only successful winning when you set up with a 3-to-1 risk reward, and I'll draw that out in a moment. I actually ended up moving this take profit to accommodate the future direction. As I saw it was falling and prices were going lower in my favor, I moved the take profit and ended up taking out another 100 pips and ended up taking over 300 pips out of this trade and made over $100,000. So you can see in my analysis, I said pound versus US dollar has formed both a long-term and short-term double top price pattern. These are bear price patterns. Once these price patterns are confirmed, they indicate that the market is going to go lower. And then I said penetration below the low of today's inside day bar will likely open a move lower. And that's exactly what happened. It triggered this 124.17. As you'll see in a moment, it almost came back to the stop loss level. I was kind of lucky, didn't get triggered out. And then it hit the take profit some 300 pips lower. Now I'm looking at a long-term daily chart of the British pound versus US dollar. You can see it goes back about a year and a half, and this was the governing double top that I was referencing in my email. You can see when it crashed through this neckline. A neckline is simply a line drawn through the pattern. Once it confirmed that, you can see it opened up a nice healthy move lower. Now what prices are wont to do is that very oftentimes they will retrace back to the breakout area, in this case the neckline, and once it did, it then put on another double top, which is right around where I sent out my email. And this was the sell order. So you can see this inside bar where you had literally the range of that day from high to low sat within the range of the previous day. So we call that an inside bar. To me, this represents a coiling, a springing, and then by virtue of the prior pattern and direction of trend, I surmised that the breakout was going to be lower. Now you can see after it broke in my favor, it did snap back about 36 hours later and almost clipped me out on my stop loss. It stopped at about 124.73. My stop loss was 124.87. And you can see I don't get panicked. I leave my parameters in there. I let the market work. And then eventually it broke in my favor and I got out in the low 121s, taking out 300 pips, letting this trade work in my favor by identifying the direction, the pattern, the inside bar, combining it with a sell stop at 124.17, a stop loss at 124.87. This was my risk. This was my reward. So you can see my reward was 3 times the size of my risk. And again, if you can set up your trades with a 3-to-1 risk reward, you can actually lose 72% of your trades. So just like Michael Jordan, you don't have to freeze on any particular trade, worrying if you're going to lose on that trade. Frankly, I don't care if I lose 3 or 5 trades in a row. I'll know that I'll make it up with 1 or 2 very good trades, which inevitably come along once or twice a month. This was an email that was sent out just a few days ago on May 17th at 1:55 p.m. I called it Australian Japanese Yen Layup. And as you can see, the 2 trades that I laid out in this email were the Australian dollar versus the US dollar, with a suggested order at the sell stop at 63.99. Now you'll see that this order was not triggered and the market went the other way, which is just fine and dandy with me. If I'm wrong, at least I didn't pay the price, and I'm happy to reevaluate that. Similarly with the Australian dollar, Japanese yen, I had a sell stop, and as of now, that order has not been triggered, but this is a weekly order, so this sell stop is pending for the rest of the week, and we'll see what happens. Now I'm looking at the live chart of the Australian dollar versus the US dollar. This is on a daily chart. And prior to my email being sent out, I was looking at this resistance pattern and surmising that this may pose a significant resistance area and we may see lower prices from here. And then on the basis of observing this little key reversal bar where the market went higher, closed on the low, I recommended putting a sell stop just under the low. So again, I can look at my analysis. It's all very subjective, but ultimately I require the market to confirm my analysis. And as you can see, the market stopped dead short of my entry order and went the other way. So I was not triggered into the order. No harm, no foul. I simply cancel that entry order and go and look for another trade. So again, I'm going to show you a sequence of 3 trades where I won big on one, scratched on the other, and lost on the other, and came out a big winner. And this is how, if you apply my methodology systematically over time, it can work in your favor as it has for thousands of our members. Okay, and so this is an example of one of my losing trades. It was sent out on April 22nd at 4:45, again to our daily elite pattern trader members. I was calling this thing the yen peak because I was hypothesized that the yen would strengthen, and certainly against the New Zealand dollar. So in this particular trade, based on some technical price patterns, I was looking at the head and shoulders, the inside day bar. I recommended putting a sell stop at 63.99 and a stop loss just above that. This is not indicated properly. It is a stop loss about what are we talking about, 58 pips higher than our entry. And as you can see, I was clicked out on this trade for a 58 pip loss. So now I'm going to show you what all of this looks like. Okay, so this is what the trade looked like on my trade station when I entered to go short the British pound versus US dollar at a price of 124.17. I had a stop loss at 124.87, almost triggered me out. And then I had the old pending or take profit there, and I forgot that I updated the take profit. So I jumped right back in when I saw there was still more room to be left. And cumulatively, I took out about $135,000 by going short the British pound versus the US dollar on a sell stop of 124.17 under that little inside day bar after I saw the double top price pattern in a long-term downtrend in the British pound, and took out a healthy $135,000 cumulatively out of this trade just over a few days. Actually, it's probably important to note that I entered this trade it's probably important to note that I entered this trade short British pound on the 6th of May and I got out on the 18th. So I will stay in a trade for days, weeks, and months to allow that trade to work out in my favor, ultimately taking out $135,000 just by sitting in this trade for 12 trading days, or 12 calendar days rather. Now, this is a view of this New Zealand dollar versus Japanese yen trade that I took on my trade station on April 23rd. The idea was to sell the New Zealand dollar versus Japanese yen on a sell stop at 63.99. My stop loss was at 64, 57, 58 pips higher. You can see I got clicked out on this trade and I lost about $13,500. So just in summary, I made about $135,000 on the British pound versus US dollar short trade. I scratched on Australian dollar, US dollar. That trade was not clicked. It did not hit my entry order, and so basically did not trigger my order. And then on the third trade in the New Zealand dollar versus Japanese yen, I lost about 13.5K. So all told, made about $120,000 on 3 trades where I scratched on one, lost on the other. So effectively, I only made money on 1/3 of my trade. So there's a generalized myth which says that you need to have an extraordinary winning percentage to have a long-term consistent winning record. This is a myth. Most people who are looking for 85 to 90% winning trades are by definition only extracting very small pips in the market, 5 pips, 7 pips, 10 pips on a trade. But in order to extract 10 pips, you need to risk 10 pips. This only gives you a 1-to-1 winning trade thing. In that case, you have to be 85, 90% correct. You're not going to be able to do that on a sustainable basis. That's not my opinion. Look at the industry statistics, which show you that 90% or more people are losing because I think that their outcome is just not significant enough. So you can see in the British pound, I was risking about 70 pips. I ended up taking out over 300 pips on the trade, which is well over a 3-to-1 risk-reward ratio. And if you're effective at setting up your trades with a 3-to-1 risk-reward ratio, you can actually lose 72% of your trades. So just like Michael Jordan, you can take that shot every time without fear of losing on your trade. So I hope this was very helpful and you got a ton of input out of this video. I look forward to your comments and wish you a healthy and prosperous trading week, and I'll see you next time.